What's going on, guys? It's Monero Matteo. Welcome back to the channel. We have done so much great content lately. We're really busting the stuff out there, and I think that we're putting out information that nobody else in the crypto sphere is putting out. And I think that's because we have a particular perspective on what's going on in the crypto sphere that other people just don't want to share the perspective on, or at least dig into in the first place, because our perspective is majorly bullish on what we consider to be the true cryptocurrencies, led by Monero. Some of us consider Pirate Chain, Haven, and Dero to be other great cryptos in that sphere, but we call everything else surveillance coin. Bitcoin, Ethereum, Cardano, and I like Cardano. It's got other uses than just finance, which I think justifies its public blockchain potential. Same thing with Ethereum, but in regards to Bitcoin, it's just a public financial blockchain. And we went into that yesterday. I'll link the video, and you guys can check out my issues with that. But guys, if you are watching this channel and you've been a follower of this channel, you've been so ahead of the curve on so much. And we're about to go into another thing that we've been talking about a lot here on this channel ever since we've really started the channel, about unrealized capital gains. And this is coming. I really do believe it's coming. And fascinatingly, you guys, I think, will be shocked that the supposed hero of the Hill, who fought for crypto in the recent battle on the Senate for a particular amendment which would have been very favorable to the crypto industry regarding tax compliance, proposed a tax on unrealized capital gains. Senator Wyden, Democrat from, I believe, Oregon, he had proposed this tax which would have nuked crypto. It would have totally nuked it. People would have no longer saw Bitcoin as digital gold because Bitcoin is, of course, tracked. And if people can figure out which wallet is yours, which isn't that hard given that all the exchanges are KYC, know your customer, and you take your money off the exchange to another wallet. Most people don't know how to Bitcoin wash, and we actually went through on a video of ours all the problems with Bitcoin washing and mixing to make your cryptos not look like they're yours, not make your Bitcoins look like they're yours. They're going to be able to see how much is in your wallet. And if they come out with this tax, say goodbye to this whole digital gold argument, because all of your gains on Bitcoin and some of these other cryptos are going to be taxed market to market that year. And so you're going to have to sell a lot of your cryptos, assuming that you don't have the liquidity to cover that tax liability. And then that's going to put massive pressure on the market. That's going to hamper adoption. This guy almost passed this in 2019, which is crazy. Now, on this channel, we definitely recommend you comply with the law, you pay your taxes. I am a tax accountant. I'm an accountant. If you need help with any of that, if you need advice on any of that, please let me know. We can get into contact. Or if you need bookkeeping or payroll or anything like that, please let me know. That's kind of what I do. But we're going to watch a little bit of this Nomad Capitalist video. If you don't know who he is, he's very intelligent. I would give him a follow. Check out his stuff. He's got a great plethora of information in regards to taxes. And so I want you guys to understand this because we talked about this a lot, and knowing this puts you way ahead of everybody else in crypto, I believe. So let's dig into it.
It was the idea that, hey, who cares about capital gains tax when you can simply borrow against your assets forever? Well, number one, if you're borrowing against all your assets and you have cryptocurrency and got a lot of pushback on, early big problem. You can learn more at nomadcapitalist.com. And this is something that we've seen coming for a while. One thing that I have got a lot of pushback on earlier in the year from Bitcoin and cryptocurrency investors as those assets rose dramatically in value was the idea that, hey, who cares about capital gains tax when you can simply borrow against your assets forever?
Right, and this enforces the whole digital gold argument. I can just hold on to my Bitcoin forever. I don't have to sell it. Therefore, I don't have to pay the tax on it. And that all will change dramatically if they do something with unrealized capital gains.
Well, number one, if you're borrowing against all your assets and you have no income, how do you pay back the loans? But people in the leftist political circles have figured out that that's just what you shouldn't be allowed to do. They've seen the billionaires like Elon Musk and Jeff Bezos and Bill Gates who've seen their fortunes rise dramatically in the last couple of years. They've said, hey, how come these people get to borrow money against their stock to live a lavish lifestyle? That shouldn't be allowed. So let's go out and let's tax people on their unrealized gains. Let's have either every year we're going to figure out what you have on December 31st, or let's have a one-time tax where we're going to say as of a certain date, everything has to be deemed sold. This is what happens when you actually expatriate from the United States. If you trigger one of the three tests to be what's called a covered expatriate. They say, all right, we figure you've sold everything, and because this is our last chance to tax you before you formally leave the U.S. for good, never to be heard from again potentially, you're going to pay us tax on any unrealized gains. That's something that already happens.
Exactly. So if you're in these public blockchains, then even if you want to leave the country, which a lot of people are talking about because of this bill, they're like, you're going to ship a lot of our industry out of the United States. And it's like, okay, well, you better be ready to pay billions of dollars in taxes when you go to do that. And, people like Charles Hoskinson, he's like, I'm not leaving. This is my country, which I love the sentiment of. But yeah, they're coming after crypto and they're coming after your taxes.
There's already a precedent for it. It's something that there was a precedent set for with the Trump tax reform, where they went back and basically said, hey, for the last 31 years, whatever you multinationals have earned, you're going to have to bring that money back to the U.S. and pay a tax on it. And so now leftist politicians are saying, well, let's do something like that to basically say, hey, Bill Gates, you've got $125 billion and you haven't paid tax on all that run-up in gains, so we'll just assume you sold it and we'll tax you. Now, there's all kinds of economics about that and why it may not work, and what happens if the asset goes down. Do you get to claim it back later, and how do you value art? Well, politicians have been pushing forward nevertheless, because if there's one thing that politicians won't let get in the way, it's logic and good reason. And so politicians in the U.S. have been, a few of them at least, pushing forward with an idea to figure out some way to tax your unrealized gains.
And one of those politicians is the so-called hero on the Hill, Senator Wyden, who did the Wyden proposal, which unfortunately got shot down for the crypto sphere. But yeah, look at this. We'll just take a look at this now. We'll go back to the video. But he proposed a tax rule that would mark to market the investments held by wealthy people, and a lot of wealthy people now because of crypto. And so what will happen to a lot of those big whales in the Bitcoin sector, Ethereum sector, I imagine some of them are Americans. And if they want to leave the country, they're going to have to pay tax on that. Or they're going to have to pay tax if they come out this new proposal. Right? So that's going to cause enormous amounts of selling. Appreciation would be taxed at the same rate as all other income, up to 37%. So it wouldn't be as a capital gain or a long-term capital gain. It would be as all other income. So that being the case, that's going to cause massive selling, because you're not going to want to wait till the end of the year for that market to market to tax you as an ordinary income, because ordinary income taxes are much more than long-term capital gains tax. You get a favorable rate if you hold your assets for over a year. Top rate is 20%. Now, if Biden gets his way, it will be the top rate as the ordinary rate, plus the 3.8% net investment income tax, which will ultimately make it like 30 to 45%. I think the Tax Foundation had it at 43.8%. That is huge. You're giving half your money to the government, and then if you have more gains the year after, you then will have gains. And so a lot of these people, to lock in that lower long-term rate, because maybe they've held these cryptos for quite a while, they will sell those cryptos that year. They will liquidate them, and they'll go into fiat to prevent them from paying that higher ordinary income tax rate. So that's something to consider. Potential hiccups include having sufficient liquidity to cover the tax bill, like we just talked about. So in order to have that liquidity, if you don't have it in your back pocket, you're going to have to sell your cryptos. So, yeah, it's crazy. And they're going to do this. I really am confident they're going to do this. And they're talking about wealth taxes already, and given what they're going to be doing in the infrastructure bill, it's going to consolidate political power. It's going to make it much less likely that any conservatives take over in 2022 in regards to the House and the Senate in the midterms. And we're not going to go down that whole rabbit hole. It's not particularly for this channel. But and plus, I don't want YouTube to kick me off because they're very leftist. But yeah, it's a problem. I see it coming into the future, and they're already working on global minimum taxes, where a lot of corporations now in the United States and other G7 nations, they have to pay certain minimum taxes, and that's going to be expanded to include just about everybody. What if this global minimum tax evolves and metastasizes into a global income tax, a global unrealized capital gains tax, so that no matter where you go, you have to pay this thing? I think people very much underestimate that. Now, You may have a lot of people in the blockchain caucus, which is now a rising force, trying to stop that. But at the end of the day, this is about keeping the banksters in power, I think. I mean, that's one side effect of all this, because a lot of people aren't going to want to adopt these cryptos if that's the case. And we talked about the difference between Bitcoin and gold. A lot of people will hold Bitcoin instead of gold because the prospect of Bitcoin going up in value versus gold is that much more. Now, if Bitcoin isn't appreciating as much in value versus gold, why would you not rather just own gold? I really don't understand what the value proposition for holding Bitcoin instead would be. Right? Especially if it's public, if it's on chain, they can see everything. Gold you can just, store in your vault. You could, dig it underground. Now, somebody made a weird comment the other day. They said that, the military can fly planes over with certain, technology to figure out, who's holding gold, who's holding silver in their house, because they can somehow identify that through some geological tool. I'm not sure, but, that could be a problem. But, yeah, that's going to make holding Bitcoin much less reasonable, versus other assets. So let's continue here. So it's against millionaires and billionaires. This levy assessed annually, right? So if the government needs more money, they would just, kick it up a notch. And, assessed annually would kick in at the same rate as all other income. Let's see. So this talks a little bit more about the deets, how to calculate your mark-to-market value. You can dig into all this stuff. But, yeah, that's pretty insane, right?
Again, whether it's potentially a business that you haven't sold that could be highly illiquid, a piece of art, a piece of real estate, whatever the case may be. One thing we know historically is even though they target the billionaires, the billionaire class is taking advantage. It's going to be a lot more than just billionaires. And I'll tell you why I know that, because of a new article that I came across recently in the Wall Street Journal that talks about how a group of, I believe, 7 politicians is pushing forward to basically eliminate the capital gains exemption that comes at death and reduce it to $1 million. An article from the Wall Street Journal says that
right, and now it's like $11 million, the estate tax exemption. So if you make less than $1 million, or you're looking to pass that on to your descendants, that is exempted. Now, there are different trusts that you could set up in order to get around that in most cases, but on with the video.
The discussion draft released recently by Senator Chris Van Hollen of Maryland and others marks a first attempt to put details on the idea that President Biden endorsed during the 2020 campaign. Capital gains taxation is likely to spur significant debate in coming months as Democrats look to raise money from high-income households to pay for Mr. Biden's proposed spending on infrastructure and social programs. So before we even get into this, you can argue, should people pay tax? Shouldn't they pay tax? If you live in the United States, listen, you have taxes. If you want to join me in the nomad capitalist world, you can live a pretty tax-free lifestyle if you want. But the idea is not that, their idea is that it's unfair, but that's merely the setup for the fact that, hey, we have social agendas that we need to buy votes, and we don't know where the money's going to come from because they waste so much of it. Somehow the UAE and other countries can build the best-looking roads, the best infrastructure you've ever seen in your life with zero tax. Okay, they've got a VAT now. I highly doubt it's that 5% that gets added in on every Prada bag sold that's paying for the gleaming infrastructure, but they figured out how to get by with a minimal level of tax. The U.S. has some of the highest tax rates in the world, and they want them to literally, in some cases now, become the highest tax rates under Biden's proposals. You would have, in some cases, the highest tax rates in the world on some.
Right, and we went through that in a previous video. Go check out, if I can remember, I think the trillions of dollars of assets will go here. I'll find it, I'll link it.
Some types.
But it would be the highest.
And somehow they still need more money. So this is all just a setup to make you the evil rich guy who has been working hard building your business. Maybe you've got a boost because people are ordering more stuff online the last year and a half. It's not your fault, but you're the evil jerk who now has to pay for their social program so they can go out and buy more votes. And here's the thing.
Right, and it is a vote buying scheme because we're going into like this two-tiered society, especially with this universal basic income thing, which has been introduced over the last couple of years, which used to be an absurd idea. I mean, everybody laughed Andrew Yang off the stage for the most part, but now it's a regular thing. And it's just the next step onto the financial collapse. But now you have this sort of underclass, which has a lot of envy against the billionaire class and the people who have much of any money stored up. And that envy, I imagine, is going to come against the crypto community. And they're going to try to get that money. And it's going to become a political selling point. And a lot of politics is just bribery. It's just, hey, I'm going to steal money from these people and give it to you. And bribery is apparently illegal. You know, you can't pay a politician to do certain things, but the politicians can pay the public in order to get votes. And so I imagine any source of tax revenue or any enemy that they can scapegoat to point at as to why these people are poor or not getting their fair share or whatever, they're going to come after them. So I suspect that's going to happen. And I think we talked about all that we needed to. Now, back to our friend Janet Yellen, the old chair of the Federal Reserve, now heading the Treasury in the Biden administration, who, if you recall from our video, I think it was our second video on the infrastructure bill, we talked about Janet Yellen lobbying a lot of the congressmen to not go through on the Wyden amendment. Now, why would she want to do that? Well, because she wants to crack down on crypto. She is part of the bankster crowd. And if you recall, the other amendment, which was proposed that she backed, as opposed to the Wyden amendment, which wanted to keep the broker definition applying to only crypto exchanges, she lobbied for another amendment which would only make it Bitcoin miners. And that's, go back to our Bitcoin black-pilled video. Why would that be the case? Well, maybe they are kind of in on Bitcoin, but that's kind of conspiratorial. Leave your comments and tell me what you think about that. But and when I say Bitcoin mining, I mean proof of work mining. And so it's not just Bitcoin, but it's other mining as well. But what does she think about unrealized capital gains taxes? Biden's newly appointed U.S. Treasury Secretary, Janet Yellen, is currently considering some shocking policies. One consideration, taxing unrealized capital gains, also known as mark-to-market taxation. Unrealized capital gains, put simply, is the increase in the value of an asset that is yet to be sold, in which case you'll have to sell it in order to get the liquidity to pay the taxes, right? It is the theoretical profit existent on paper. Now, Wall Street will hate this, which is one thing that I guess we can look forward to. Wall Street is going to heavily lobby against this, but then again, a lot of Wall Street makes their money from trading, and traders already go by mark-to-market rules in many cases. So there's that. If you still own a house when it was valued at $350,000 as opposed to selling it, you would have grossed $50,000 in unrealized capital gains. If you sold the house when it was valued at $350,000, the $50,000 gain would then be realized. But maybe you'd have to pay tax on that gain, which would be crazy. And you can read more about this. And we're going to end with some stuff that is going on in the Biden plan for taxes. And I'm not sure where these proposals are as far as processing. This was written June 16th. I'm not sure if this is going to be included in the infrastructure bill at all. We will see. They're debating about raising the debt ceiling, which we know where that's going to go. Every single time it gets raised, it's just hokey pokey theater. Top marginal income tax rate to 39.6%. Tack the 3.8% net investment income tax on there. That's going to put the top rate for a lot of capital assets on 43% or so. And you could look more at this here. But I think we covered most of what it is I want to cover. Now, I think a lot of you see the threat now that unrealized capital gains taxes hold. And it's something to look into. It's something to be aware of. And it's something to definitely be aware of if you're in these public blockchains, right? And so that could definitely hamper the gains. And it's the gains in many cases which, get people all laser-eyed and rose glasses and high, basically, on these cryptos. I mean, a lot of people justify the utility of these cryptos by saying, look, price is going up, I'm making a lot of money. Who cares what's going on with this crypto? Who cares if it's a scam coin? Who cares if it's not a fungible currency, which a lot of these public blockchains aren't, just by their very nature of being public blockchains, because as we went through in our DeFi hacking video, they can be blacklisted. A lot of these coins can be blacklisted by certain authorities. Therefore, nobody would want to have those coins transacted to them. Nobody would want to mine those coins, which means that those coins fundamentally have to be valued differently than the other coins in the protocol, which means it's not fungible, that all the coins aren't of the same underlying value, like gold or silver or Monero, which we love on this channel. So that creates problems. So there are a lot of problems with these public blockchains, guys. I mean, if you watch this channel, again, you are so ahead of the curve. And I'm going to ask you guys, share these videos, get this information out to people. We have to wake people up to this stuff. And if we don't, we could find ourselves in some trouble. Our friends could find themselves in some trouble. And we would want that to happen, even though I would be making a lot of money, because a lot of people would be coming to me as a tax accountant. They'd be like, Matt, help me with these unrealized capital gains tax. And I'm like, well, I tried to help you, but you didn't listen. So yes, I'll do your taxes. Thank you very much. But that's all that we have to say for this video. More info coming out. I have so many videos I need to do. Please comment. Please tell me what you think about all these developments. And I'd love to hear from you. Now, I have donation addresses in the comments section for Monero, Dero, and Pirate Chain. If you think the information I put out over the last couple of weeks has been good, I would ask that you donate and chip in a little bit. Now, I have a Gab, a Twitter, a Rumble, an Odyssey, all with the same name, Monero Matteo. Thank God nobody's taken it. It's awesome. But yeah, that's all for this video, ladies and gentlemen. I hope that you find value from it. Monero first. You know how there's like an America First movement, an Orthodoxy First movement? I think we should have the Monero First movement. I think that would be great. Monero first, everybody. Have a wonderful day. God bless.